It's time for the April real estate market heat check. In this episode, we'll give you our observations of the current real estate market in Cleveland, and we'll also talk about what makes a good property manager, realistic good cash flow, and more on the Cleveland Real Estate Investor Podcast.
Investing in real estate can be full of pitfalls. Don't end up as another horror story on Mike Riley's Cleveland Real Estate Investor Podcast. Hi, I'm Mike Ferrante with Century 21 Homestar and the 21 Mike team, serving buyers and sellers all over the state of Ohio. We specialize in helping investors buy and sell real estate, so before you make another move, go to 21mike.com to schedule an appointment. The 21 Mike team, your one-stop shop for buying and selling.
Hi, everybody. It's springtime, and I know you've all been waiting for the hot time of year in Cleveland real estate investing. It is time for the April heat check with my partner in crime / real estate, Mike Ferrante. Mike, good afternoon.
Hey, nice to be here. I think of that 50s song, Heat Wave.
Well, you mentioned before we started recording, you said, I've got my DJ microphone as opposed to my earbuds. So everybody, I should be sounding hopefully pretty good on your end. And of course, Mike Ferrante is always splendidly attired with his fancy dancy microphone. Right, Mike?
Absolutely. Nothing but the best.
Okay. Well, I'm sorry, folks, we're a little bit delayed. We had Easter last weekend, and all of a sudden things got real busy on the contracting side. So, Mike, start talking.
Yeah, so we got busy too, as expected. I just did a little market update video for my YouTube channel, and I had to throw in the little "I told you so" for all those doomsayers who said, "Oh my God, these rates, the market's going to crash, prices are going to come tumbling down." They were all wrong, Mike. All of them.
Okay, let's get those. Let's unpeel those that onion of numbers.
Yes. So, we love our stats. You and I believe in tracking numbers and figuring stuff out that way. And the numbers I like to track are, of course, number of sales and number of listings. That kind of gives us a barometer on the market. And look, the last couple of years, like we keep saying, it's kind of a throwaway. It was a weird time, low rates, every stars were aligned. So we're not expecting those numbers. Yeah, COVID and pent-up demand and just everything. Really ultra low supply. So anyway, as it always happens in March, the number of sales rose to 1,187. That's Northeast Ohio, Cuyahoga County residential sales. Now, a lot of people will say, yeah, but Mike, it was 1,265 last month, and that's a 12% drop.
Okay. All
yeah,
right.
that's a 12% drop. Oh my gosh. But that's normal. You go back 5 years when we had a balanced market in 2018, 1,230 sales. So that's a normal number of sales, right around 1,200.
Okay, so in March we were 1,200.
Oh, almost 1,200.
Yeah, bingo.
And last year, March, 1,265. So yeah, we dropped 12%, but it's normal. Like we're at the number we should be at.
Okay. And how is what's your gut telling you about April?
Well, so here's the thing, Mike. We're already starting to see multiple offers and bidding wars, and not like it was where we had 20, 30, 40 offers on a house and people were going 10, 50, 100,000 over list price. Although I will tell you, I just did have a house in Moreland Hills over in your neck of the woods, kind of. Somebody gave us an escalation clause, $200,000 over the list price.
Wow.
So yeah, I mean, it's heating up again. So
was this an out-of-state investor?
It was not. It was an owner-occupant who was looking for a home to live in and rehab. The house needed some work, and they just came in guns blazing, multiple offers, and they said, we want it. We'll go up to this number. And that's the whole thing with these escalation clauses. But basically, it's kind of like putting in an eBay offer. Hey, we're going to bid this, but we'll go up to this number, but you got to show us your best offer, and we'll beat it by X.
Wow. Wow.
Yeah, those are called escalation clauses. We're already seeing that stuff again, Mike. Now, is it going to be like during COVID and the last? No, no. But multiple offers just weren't that common here in our market for many, many years.
I thought only multiple offers happened in LA, not in Cleveland.
So I would say just anecdotally, maybe 1 in 20 times we'd encounter a multiple offer, maybe 1 in 30. But during COVID, the last couple of years, almost every listing had multiple offers on it.
Okay. Well, I just
And
had
the
a
reason for that, yeah, the reason for that is the shortage.
yeah.
We're still just over 2,000 listings, which we should be, and I say should be, 5 years ago, 4,000 listings. We're at half the number of listings we should really have to meet the demand.
Well, I read a story in the New York Times in the last week. Maybe it was over the weekend. It's all a blur with Easter, Passover. And they were talking about people just didn't want to put their house on the market because they're locked into great rates, at 2-3%. Why should I sell my house even if I can get money out of this house in a good market? I still got to go out and I got to refinance it 5-6%. Your comment?
100% right. And that's something that we're talking about in our team and our coaching. And absolutely, why would you do that? Well, that's the question, is why do you need to move? If you say to me, well, I'd like to move, but I don't need to move, of course. Why, hey, if you're comfortable, but you just have this kind of want, this nagging, so it would be nice if I had a swimming pool, or it would be nice if I had more acreage. Well, no, those people aren't moving. But if you've had your third kid and you're still in your 3 bedroom, 1 bath house, how do you think those people feel?
Right. And they're
That's
not
painful.
going to add on because that's even more expensive, right? Construction,
Yeah.
new
I mean, I
construction.
mean, I think I think people go through those conversations in their heads in some cases, and they ask themselves, well, is this really where we want to be for the next 10 years? And a lot of times they bought that first house thinking, well, when it comes time, we'll upgrade school districts, or we'll get that forever home, or that home we're going to be in for the next 20 years. But at a certain point, people are asking themselves, how bad do I need to move? If you're renting and your lease is up and your landlord is telling you, well, I'm going to raise your rent 15%. Yeah, that's another instance where interest rates kind of don't matter, because unless you
Right.
got cash, you got to get a mortgage.
Right. Exactly. What has been how about the prices? Are prices
Yeah.
stabilizing or are they going down a
Well,
little or what?
so that's the big news, of course. And when I say all those people were wrong, everyone was saying prices have to drop, right? People were overpaying for houses. They have to drop. Well, they didn't. Guess what? Last month they went up, just like they do every spring. We're back up to a median sale price in Cuyahoga County of 180,000. A year ago, we were looking at it was 178. So not the huge leaps and bounds gains that we've had the last couple of years, but still up. The market has adjusted to the new rates, and people are realizing because of the inventory shortage, prices aren't going down anytime soon. And the other indicator, Mike, is market time. We always talk about how fast homes are selling. Now, it's not like June of last year when it was 7 days, but when I tell you it's a 29-day median time to sell your house compared to 5 years ago, in March, 52 days. So you
Wow.
tell me, is that a seller's market?
Right. It is a
Yeah.
leaning towards the seller's market. Okay. Here's another question for the analytic wizard. I'm getting a lot of calls into our business, people looking for property managers for their house. My
Mm.
property manager's not getting back to me. I don't know what's going on with this house. And we ask for the address, how long do they own it? And they bought it a year ago, or maybe they bought it 6 months ago. And it's a questionable area they're in. And I basically tell them, you need to get out of that. That was a bad deal. Even if you got to take a loss, you didn't buy in a good area, and you're going to have a problem renting it to a good tenant. Your comments?
So it's a couple of things to talk about there. One is management. That's what you started off asking about. I can tell you this, what I'm seeing from property managers is a lot of them are finally kind of waking up and smelling the Folgers, and they're beginning to not manage in certain areas. And that's just their business model. They're asking themselves, why are we going to these areas where there's so many challenges? And I'm seeing more and more managers saying, no, we don't manage in those areas. And that's pretty telling. And now the other part of it is because there's such a demand for property management because of the investor frenzy of buying here, people are starting to scrape the bottom of the barrel finding a property manager, and a lot of them, like so many people do, are looking for the cheapest one. And what do you get when you hire the cheapest property manager? The same thing you get when you buy the cheapest blender. It breaks in 6 months.
Right. Right. Well, I'm telling people to sell, just sell and get into an area where you can get a nice, secure, long-term tenant. Next question. The investors who are buying that you're dealing with, are they smelling the Folgers and trying to get into the short-term rental business?
Overall, no. Mike, what you've created with your portfolio and what you offer your clients is still pretty unique. Not everybody can manage that. It's what you do is pretty unique, and there's only a handful of people doing it. Most people are still doing the traditional long-term 1-2 year leases with singles, duplexes, and maybe some bigger multifamily.
And what is the people, the investors that are buying? Are they out of state? Most of them, majority of them, or are they?
Still,
Go ahead.
yeah, still a good mix. We still have our local investors. There's people like you and me who've lived here, virtually our whole lives, and we know we've got a good thing here. We don't have to go out of state, but like we've been talking about for so many years, the real estate prices compared to the rents in other places aren't like what we have. You could still buy properties and get good cash flow here. And with the volatility in the stock market, I think what you're seeing are a lot of people saying, well, I don't want to put more money in the stock market. What about real estate? And then when they find Cleveland, whether you're from Ohio, California, Florida, Israel, Australia, people are coming to us still saying, I hear I can get good cash flow if I buy in your area. Tell me more.
What is good cash flow that you've seen? I mean, realistic good cash flow as opposed to wet dream cash flow. Sorry, folks.
Well,
Earmuffs.
hey, that's only PG-13. We're still in good shape.
I know.
So I'll tell you one barometer a lot of people use, Mike. It's the 1% rule. So, for example, if the property costs 100,000, can I at least gross 1,000 a month? 1% of the purchase price. That's sort of a quick litmus test that a lot of people are using. If you're under that, you better be in a really nice, decent appreciation area. And if you're over that, then you start looking at, wow, I can get some real cash flow here. Now, if you're way over that, uh, price tells you the whole story. If you're buying a $50,000 property, that's when you have to start investigating the challenges of the location that you've chosen.
The hidden costs, like the percentage of the tenants who are actually going to pay rent as opposed to having to evict. Those are the hidden costs as opposed to just doing a blind calculator and saying, okay, I bought this house for 50,000 and I'm looking to rent it at 750. Now I'm over 1%, right? But they're not factoring
Yep.
in 2 or 3, 4 months where maybe you got zero rents because you couldn't get somebody in, or they stopped paying and then you had to evict them, or they ruined the house and now you have to spend $10,000 getting it up to snuff. I mean, that is the real deal, right?
Absolutely. Vandalism, theft. Your house became vacant and the furnace got stolen. These are real things that happen. And also your turnover. We talk about maintenance and turnover. When you are renting in stable areas, I've got tenants in my houses that have been there for over a decade.
Right. Right. Exactly. And then you can structure the rent so that they have some quasi ownership in it. So they're, one of our rentals, we have one of our top guys in there, and he just doesn't want to buy a house. He's been there 15 years, and we keep the rent at a certain level, but he cleans the gutters, he takes care of the outside, he does the miscellaneous repairs. The only thing we're on the hook for is the capital, like new furnace, hot water tank, appliances, that kind of stuff. So it gets to be more predictable, and there's value having that long-term tenant, right? Hey, let's stop here. We got to pay some bills. 30 seconds, and we'll be back. If you've been listening to this podcast, then you understand or should understand the pitfalls of investing in Cleveland real estate. Say you're looking for an investment property to rent, and these are the things that could happen and often do. You overpay for a house, and it's in the ghetto. Then you find that it's a money pit with endless surprise repairs. Your hapless property manager, who may be the brother-in-law of the realtor, gets a tenant who after 3 months stops paying the rent. Then the toilet explodes, and you have nobody to repair it because, guess what? The property manager is not answering the phone. Yep, that's the ugly side of the Cleveland real estate market. But we have a solution. Buy one of our properties. It's been inspected. It's been vetted. It's in a rock-solid part of town. It comes with a Gold Star tenant paying top dollar rent, and we manage it. Call us at 216-371-8160 if you're interested.
Yeah, the other thing about single families that I think a lot of people miss because they're just looking at numbers on paper is that when you have a single family home, the tenants often think of it as their house. So even
Right.
if they're not owning it or doing a rent to own, it's still their house. They're not sharing it with a neighbor. They don't have to worry about the upstairs neighbor in the duplex blocking them in the driveway when they're trying to rush out and get to work or get to an appointment. It's their house in their minds, and they tend to take better care. They tend to stay longer. They're not transient like you have in a lot of the multifamily stuff that you look at. Now, again, that's just sort of a generalization, but over the years, I've seen that to be true.
Right. Okay, well, let's go back to the stats, Mike, and what else can you tell us?
Yeah, so I hit the four stats that we usually talk about, but let me do this. I'll sum it up for everybody since I spouted off a lot of numbers. I'll bottom line it. Bottom line is yes, number of sales are down, and that is a direct function of interest rates going up. But they're down to normal numbers. Okay? And the days to sell and the median sale price are indicators that the market is still strong. We're at just under 30 days to sell, which for us, that's summer numbers. That's peak summer home selling under 30 days. That's happening in March, and we're not even into the full spring market yet. And what's causing all this is the lack of inventory. It's supply and demand. We're still at half the number of listings that we ought to really have to meet the demand out there in the market. And like you mentioned, Mike, there's a lot of people sitting in their homes saying, I don't want to sell. And that's a big part of the problem. The people sitting in the $100,000 to $300,000 houses are saying, well, yeah, I'd like to upgrade to that $400,000 or $500,000 house, but we're going to hold off.
Right. But what about those people that don't have a mortgage and they can buy with cash? Are they selling?
Some are, but again, it's need driven. So if you're comfortable in your house and you've got the ranch already, it's the people who are saying, "Oh, these steps are killing me," or "I'm afraid I'm going to take a tumble," or "This house is too big. The kids have gone." Those are the folks that are selling. They're moving because it's based on some need, some irrefutable need. Now, if you have cash, obviously interest rates have no effect on you, but still, moving's a hassle. So it's one of those things you have to really make the decision and it's not an easy thing. I have to remind myself. Funny story, Mike. Several years ago, when I moved, it's now 10 years. It was such a Herculean task to pack all my junk and move. I looked at my wife and I said, if we ever accumulate that much stuff again that I have to move, I will burn this house down before I will move again. And she reminds me of that to this day.
Okay, she's holding up the gas tank, right? Yeah, right.
Right.
And the igniter lighter. Our One of the things that COVID brought out is two things. I shouldn't say one of the two things that COVID brought out is one, the ability of people working remotely, right? And
For sure.
two, people have leaning more back to the quality of life. You know what? I'm not working Sundays. Okay. I'm not working 60 hours and have no life. People realize that they have choices where people would, they started changing jobs, settling in the job that they actually like. Has that had an impact on real estate?
Absolutely. So, you're working from home and you don't have a home office, or now two people in the house are working from home and you only have one home office. Um, People staying home more, dining at home, don't have a nice enough kitchen, or don't have a dining room, or don't have two living spaces. Oh, the kids are watching their TV show. Where do mom and dad have to go? Or vice versa. So all of the staying at home for various reasons uh, that happened due to COVID have definitely impacted the real estate market, because people want different things now. They also don't necessarily want to be living on top of one another. So you talk about markets like New York City, they're still recovering when people bailed out of those areas because, they didn't want to be on top of each other. And now they don't have to be downtown New York because, like you said, they can work from home.
Right. And you've got all these commercial buildings that are 50%, 60, 75% vacant. And it begs the question, why don't you just convert these into
Housing.
housing?
Yeah, I think you're going to see it happen, Mike. And if there is going to be any kind of I don't want to say crash, but like an adjustment in the market, I think it's going to happen in the commercial arena, both in retail and office. It just
Right.
stands to reason.
Right. And when you really think about some of these things, places popping up, I saw in New York, Hudson Yards, they've got a whole bunch of properties that they're selling that are like 1 bedroom, 2 bedroom condos, but the building comes with workspace, supermarket, kitchen, couple places they can go get some takeout, they can eat. So everything's within that building, workout areas, pool, and you're right in the heart of New York. So I think that's something that's going to happen. But for the average investor, things have not crashed. The heat check is still pointing to a nice, comfortable, warm place for a seller. Now, for those investing in Cleveland, prices have settled down a little. We're not getting those massive bidding wars. So it's a good time to look to buy too, right?
Yeah, I think that we're in a nice stable market with regard to price, but I do believe that because there's still this inventory shortage, that we're still going to have some decent appreciation here. Now, not the 7 to 10% that we had for the last few years. And believe me, those of us who owned real estate during that time, wow, I'm counting that theoretical money every day. But it's kind of like stocks, right? If it drops or if it goes up, you really haven't made or lost any money until you sell it. But yeah, you buy here in Cleveland for a cash flow. But I think we're still going to see our 4 or 5% appreciation. That's my prediction. I know that the NAR prediction was a bit lower. In fact, Lawrence Yun, the head economist, was saying, look, it's going to be a flat year overall for appreciation. He said that in the hotter markets, and by the way, Cleveland is at the top of that list of hotter markets.
Right.
But he said maybe up to 5% appreciation in the hotter market. So I think we're going to be at the very top of that. So 4 or 5% plus your cash flow. I still think you can't go wrong buying here. And it's not
Right.
because I'm a Cleveland homer. This
Oh,
is fact.
exactly.
We're
No,
looking at numbers.
we're keeping it real here. We're not, cheerleading. We're not cheerleading for everybody to get into real estate investing because, quite frankly, you have to know what you're doing. And, that's where we can provide some value. My business can offer consulting work, and you can help them find a place, and together between you and me, everybody, we're going to get you into a good investment. We're not going to get you into, we're going to avoid the disaster areas that you want to stay out of. We're going to get you into a good place to buy a rental property, and it'll be a realistic cash flow, right?
Yeah. If I can say one thing, just for whatever reason, this popped in my head. Those of you listening to this, thinking about it, if you're talking to other people, no problem. But if it sounds too good to be true, it's the old saying, it is. It probably is. So realistic numbers here are what we talked about. If it seems like a pipe dream, it probably is.
Right. You've got to have all your ducks in the row. And we've talked about this in earlier podcasts about getting your team together. Your team includes a good realtor working with a good contractor and property manager. You've got to bring those two pieces to the deal. You can't work with just a realtor, and you just can't work with a property manager. You've got to have both of those. Those are your bookends. Now, the property manager should be in touch with the cleaning crew, the handyman who's going to take care of it. That's what the property manager on his side or her side of the bookend is going to bring. And then the realtor, like you, is going to bring the financing, how much to put down, are you overpaying? And then combined, the two of us are going to say, this is what you can expect to get for rents. Did I miss anything?
No, that's perfect, Mike, because, and again, I'm not bashing the turnkey providers who do everything, but I think there's a lot of value in the checks and balances. If your realtor is the person selling you the property is the same person who rehabbed it, is the same person who leased it, and the same person who's going to manage it, you got the fox watching the hen house in a lot of cases.
Exactly.
And don't be the guy or gal who comes to Mike or me after 6 months and says, well, I really just trusted the person I was dealing with, and I bought this house for $50,000, and I thought, how could I go wrong?
Tell our listeners where you're going to be.
Yeah. So we're going a little bit of exploring, heading down to Frankfort, Kentucky, which of course is the home of Buffalo Trace Distillery. Going to spend one night in Frankfort, and then we're heading to Knoxville, and we're going to day trip to Pigeon Forge, check out Anakista, I think it's called, and then we're also going to check out an area called Tellico Lake, which was ranked the #1 place to retire in Tennessee. So a bunch of good little tidbits for everybody right there.
All right. Well, we'll be checking your Facebook page out, right, Mike?
Lots of pictures as always.
Yeah. It ain't Israel, that's for sure.
Well, no. I mean, come on. That's like a trip of a lifetime there.
All right. Meanwhile, I'm going to be staying at home and going out and playing some golf with this good weather. All right, Mike, yeah. We'll end it there. We'll pick it up next week when you're back and you're somewhat sober. And folks, sorry for the delay on our podcast, but more coming in about a week. All right. Thanks, Mike. Safe travels.
Thanks.
Thank you for listening to the Cleveland Real Estate Investor Podcast with Mike Riley. Please add our show or follow us on Spotify, Overcast, Apple Podcast, or Spotify. Leave a like or comment on the video. All engagement is appreciated. Subscribe to us on YouTube as well for video content coming soon. For any Cleveland listeners or Cleveland Browns fans, you can check out our other podcast, Cleveland Browns Anonymous, for our weekly group therapy session. This is also on all the same platforms as the Cleveland Real Estate Investor.